Welcome to today's edition of The Good, the Bad and the Ugly, especially curated from the world of economy and business today. Let's start with the good. If the results of Tata Consultancy Services are any indication, Indian IT services firms may be on the way to a recovery. Bellwether stock TCS surpassed analyst expectations by reporting a 23.5% increase in profits in the first quarter. The profits rose to over 7,300 crore when analysts expected it to be around 7,000 crore. Even sequentially, TCS profits grew by 6.3%. The revenue for the quarter also grew by about 16%. All of this is largely because of a recovery in the BFSI space, because banking services industry has recovered very quickly globally. Since BFSI accounts for a majority of revenues as well as profits of Indian IT firms, you could expect better results from the rest of the IT firms which are coming in the next few weeks. Another welcome statistic is that the attrition in TCS is only 10.9%. Industry attrition, remember, is between 15 and 20%. If the lower attrition is also true for other IT services firms, their returns as well as their profitability will be far better. This return to form for one of India's biggest sunrise industries is what makes this good. And now the bad. A Reuters poll of 37 economists has predicted that India's consumer inflation in June may have been at a 2-year high. The economists have predicted that the inflation would be in the 5.3% range due to rising food prices, rising international crude prices, as well as higher domestic fuel prices. If it's at 5.3% or higher, this would be the highest rate of consumer inflation growth since July of 2016 and way higher than last month's 4.87%. Consumer inflation of above 5% is not just bad for all kinds of borrowers, but also for the economy as a whole. It would definitely trigger a hawkish stand from the RBI on the interest rates, which would lead to higher rates of interest as well. High interest rates typically slow down the economy. This is what makes this bad. And now the ugly. The organization of the world's largest oil producers, OPEC, has shifted the blame of rising crude prices after a warning by US President Donald Trump that crude prices must be brought down. OPEC has in fact said that it can't be blamed for all the problems in the oil sector. In June, OPEC had agreed to a marginally higher production after Saudi Arabia and Iran agreed on a deal to increase production in both the countries. OPEC has also said that member nations have enough capacity to meet any rise in global demand. However, OPEC's assertions lack substance because it does not seem to have the desire to cut crude prices globally. Oil consultant Platts has predicted that crude oil prices globally will remain in the $75 to $80 a barrel range for the next 18 months. In fact, they may worsen because of Iran sanctions. It is this doublespeak about promising increased oil production but not doing it is what makes this ugly. If you enjoyed the GBU, please subscribe to the Business Today YouTube channel and also like us on Facebook. Our Facebook page, www.facebook.com/businesstoday. Follow Business Today on Twitter India at BT_India and subscribe to our YouTube channel Business Today India.